Beautiful, guys. Well, all right. Thank you guys so much for kind of sharing those wins. Like this is part of the community is focusing on what we're grateful for because there we get distracted a lot with a lot of things and life and everything else. But today I have Mike and Nora on here from AssumeList. Mike is the founder and CEO of AssumeList, and Nora is the head of education and training for AssumeList. And so you guys are both based in Northern Virginia, is that right?
I'm in Northern Virginia. Nora is based in New York City.
Okay, beautiful. I love it. And just so everybody knows, like, give everybody a little background on, like, let's start with you, Mike. Give everybody a little background who you are. Like, how did you come up with this assume list? Like, why did you come up with this assume list type idea? But tell everybody a little bit about
Let's
yourself.
do it. Let's jump right in it. First off, Larry, thank you for the invitation. Really grateful to be here and talking with your agents. We are so excited to be part of this group and to maybe share some of the knowledge that we've learned and accumulated over the last few years, and something that every agent really should be excited about. Why should they be excited? I'm going to add a fourth win to your book of wins. I've got a closing in an hour and a half from right now. I've got to be at the title office. I'm closing on a property. My buyer is purchasing a home today with a 2.25% interest rate. I've got a closing today with a 2.25 interest rate. Next
Yes.
week, I've got another closing. I've got a buyer closing on a VA loan with a 2.5% interest rate. So I'm excited for them, but I'm also excited to share how I do this, how we do this with your audience. Um, is anybody on this call get excited about high interest rates? Not usually, not something that agents generally get excited about. I personally get excited about high interest rates. Why? Because that means that I can market myself as an expert in a field that every single buyer has interest in. And there are very few agents out there that have this knowledge. And what is that? That's what we're going to talk about today. It's assumable mortgages. I assume, pun intended, everybody on this call has heard of him, or at least maybe has tried one or has done a deal in the past. I get mixed results when I say, "Well, how did it go?" And usually, it spans the spectrum. Yes, it went well. It was easy to all the way to the other side where it was a train wreck. It took 6 months. The deal fell apart. The buyers got frustrated, couldn't get the loan approved, right? So all kind of spectrum of experiences with assumptions. What Nora and I have done is we've basically created a system, a very repeatable system. And Nora's going to talk through that today. And she's going to cover the four hurdles, obstacles that typically plague assumption transactions and how
Okay.
we've overcome every single one. Okay, so I'm talking real fast because I want to get through a lot of material today. The answer to your question, Larry, is how did we start this? Where did this come about? All right, so I'm a military veteran, got my Marine Corps flag back there, my little promotion warrant. I retired about 5 years ago, 20-year career, Marine Corps officer. I've been licensed in real estate for about 18 years. So if you do the math, I started my real estate career while I was an active duty Marine. I was doing it part time. I just thoroughly enjoyed real estate. So over the course of my military career, I had worked with a lot of my colleagues, helping them buy homes, sell homes, right? One thing we all know, if you live near a military base, everybody moves in the military about every 2 to 3 years. So I built a good book of business kind of as a part-time job doing real estate. Well, when I retired in 2021, 2021, that was right when, interest rates were bottomed out, and then really kind of going into 2022, when interest rates started spiking, we saw, inflation numbers go up, interest rates went up, and rates went from below 3% to 6.5, 7%, which is generally where they are today. In fact, I just saw something recently. Interest rates today, right now in July, of 2026, are at the highest levels than any time in the last 2 years, right? So for a buyer right now, I'm sure the agents on this call have buyers out there that are probably sitting on the sidelines. They're really uneasy. What are they going to do? Should they wait, see what happens? Right. That at the end of this call, you're gonna have something else to talk to them about, and they should know. They should not wait. So how this came about is rates started going up. my buyers back in 22 kept saying to me, Mike, this home I was going to buy, I can no longer afford it. Interest rates went high so fast. We're going to just sit out the market, or we're just going to rent, right? And a lot of people said, "I'm just going to rent." And I'm thinking to myself, hold on. Yeah, rates were at 2.5%. Now late 2022, they're up to 6.5%. Pricing, affordability obviously goes out the window when interest rates go so high. I said, well, there is an opportunity here. I know as a military veteran that every single VA loan has a guaranteed clause that enables a buyer to assume that mortgage. It is guaranteed, federally protected. Nora's going to talk about this. A federally protected, guaranteed government entitlement program that allows every VA, FHA, and USDA mortgage to be assumed by a qualified buyer. And we're going to talk about what that means. So when I knew that, and I said to my clients back then, forget interest rates. Let's just go find a home with a VA mortgage or an FHA mortgage, and we'll buy you a home with interest rates that no longer exist, right? We're turning back the clock. We're calling this the time machine. And everybody that I spoke to that were on the sidelines all said their eyes got lit up, and they said, absolutely. If you can help me buy a home at 2.5%, let's go. Let's do it. And so I set out to find these properties, and I ran searches on the MLS. I was using, commercial tools. I was on the county website looking at property records. I could not find them. Didn't exist. There is no way to find these homes. There's no tool out there that helped you identify which ones have which mortgages and what the interest rates are. So I said that this problem is not going away. Let me build a tool that does this for agents and for buyers to find these homes. And so I set out late 2022. I started this project. We officially launched early 23. And then we expanded it across about 26 states, which is where we operate now across the country. The reason why we're not in all 50 states is because I have to have access to each MLS. And as anybody who has a website knows, that there's a lot of compliance rules and regulations to get access to an IDX website where the MLS is willing to turn on that data, that feed. So I have to go through all the compliance and regulation. It's a pretty intense process for each one. We're in about 55 MLSs nationwide, which covers about 80% of the nation's assumable mortgage market. The remaining 20% are spanned across the remaining 300 MLSs out there, and some of them are really kind of rural. So we'll talk through. I'll show you in a minute where we cover, and so hopefully, Larry, that answers your question. Kind of a broad overview of how we got to where we are today. We are really excited to kind of share the knowledge that I've done. 50, 60 assumptions, 70 assumptions. I lost count, dozens and dozens.
You're at 67, bud.
There we go.
67. Today will be 68.
So I kind of know where all the dead bodies are and where the issues are and how to overcome them. For all intents and purposes, it's safe to say that assumptions right now, if you get a home under contract with an assumable mortgage, generally speaking, you can close in about 45, 50 days from the time that you get the home under contract. Most cases, in all cases, really, you should be able to close in under 60. There are some anomalies to that.
You got to stop, Mike.
We'll talk through that.
You got to stop. You're so humble. You're not actually telling them how it really is.
Let me do this. Let me introduce Nora, and then we'll take it off.
You're such a super genius, and you're acting like it's normal. Come on.
All right. Let me get Nora. Let me get Nora in here. So Nora is head of education. So when I built AssumeList, so Larry, when you asked me how did this all come about, I built AssumeList, right, 3-4 years ago, and I'm like, oh, everybody's going to see this. They're going to want to use this thing. It's going to be awesome. And the agents that signed up were like, wow, this is awesome. And then they talked about it with their buyers, and they found the property. And then they came to me and said, okay, I found the home. Now what? And I'm like, what do you mean now what? Go put the offer in. Go get it on a contract. And I realized the education wasn't there. So I was like, I got to get somebody to teach people how to do this and get these systems in place. And so I brought in Nora. She is an amazing coach. She's a business coach. She's been doing real estate coaching for almost 20 years now. She's written 2 books on the neuroscience of sales. You can buy them on Amazon. Not that I'm selling anything today, but the bottom line is I'm very lucky to have Nora on the team. So when she talks, I listen. I'm going to turn it over to Nora. Nora, lay it on us.
Mike is such a super genius.
Format. Ask questions in the chat. We will answer in real time as we go through it. And then we will have Q&A in the back end of this. So hopefully that we do want interaction. We do want people to ask questions. So Nora, over to you.
Sure. Mike is such a super genius. He has something that's called unconscious competence. So he's over here telling y'all, oh yeah, you can just close your assumptions in 45 to 50 days. That's lies. Those are lies. Most people who come to me and say, yes, I've done exactly one assumption, which is fewer than 1% of agents, say it took 6 months, it took 10 months. If it's a good version of the story, it took 4 months. How can you close your assumptions in 45 to 60 days? You hire the AssumeList transaction management team and we do it for you. And we have, very deep relationships with all of the service or assumption teams in the country. And we constantly have to get the VA and FHA regulators to threaten them with horrific legal action. Because they are
I'll give some vignettes. I've got one right now at Navy Federal Credit Union.
Mike, let's get into our meat and then we'll give some vignettes at the right time. Does that sound good? Is that okay?
Perfect. You want to start with the 4 pain points?
I do. So you guys, Mike's like, oh yeah, so I've been doing this for a while. No, Mike's been teaching this. Mike's been creating a mold that we've been able to duplicate across the country. And we are now working with thousands of agents, thousands of buyers. We're helping people close assumptions. We're helping people double their business in 6 to 12 months. I think I heard Ryan talking about, recruitment. When Leo Pareja saw what we do at AssumeList, and Mike, why don't you share your screen and we'll open the 4 pain points document. When Leo Pareja saw what we were doing with AssumeList, Leo Pareja said, I'm going to bring this into EXP. So usually it's $80 a month for the agent subscription. And Leo Pareja said, no, I want to make this a totally, wonderful benefit for EXP agents. And we have seen EXP agents get so excited about recruitment, get so excited about being able to offer a competitive edge to their buyers, to their whole network. 99% of agents have never done an assumption. So just in about 10 minutes, you are going to know more than 99% of your competition, just in 10 minutes. Like, we're not even going to get to the end of the first training and you're going to know more than 99% of your competition. So you're about to blow everyone you know out of the water if you are willing to take a little bit of new action. So Mike, why don't you open up the 4 pain points?
Gotcha. All right.
Thank you, sir.
And this is from our Learning Center. So we have documents and fact sheets and guides for our agents, and this is one of them.
Yes. So just so you know, Mike ran his real estate business while he was active duty with the Marines, like some of these stories are my favorite stories, like coordinating showings, like on the satellite phone from Afghanistan. That's who Mike Clarito is. He's too humble to tell you, but I'll tell you. So long story short, I know, Jeff, right? So long story short, when Mike was shopping around in 2022 and 23 going, okay, guys, we got to find this list of assumables. I know there's VAs, I know there's FHAs. Because this man, just so you know, when he was at the Pentagon, he was running giant Intel technology projects that were such a big deal that he was reporting directly to President Obama about them. So that's the kind of tech genius that Mike is. And again, he'll never tell you this, so I have to. So I know, right, Karen? And so long story short, Mike built this entire search platform. It's got all these fancy data algorithms. I'll give you a taste of what the algorithms are that help us identify assumable mortgages. But so you don't have to struggle to find, the 0.05% of people who are advertising their assumable mortgages. You don't have to do that anymore. In all of the MLSs we cover, something like 7 to 12% of all listings in those areas are assumable VA or FHA mortgages. So that's tremendous in terms of being able to activate your buyers, even your property owners who are thinking of moving, right? Because 70% of homeowners in America today have an interest rate below 5%. And Discover Home Loans did a survey and found that across thousands of property owners, 80% of the ones who want to move are waiting for interest rates to go below 5% before they move. So you have people in your network who want to move, And they're not telling you because they're not going to say anything to you about it until interest rates go below 5%. So this is an activation opportunity that's huge, and it's time sensitive. So it's really, really a burning platform that you can get everybody to jump off of, or at least some of them. So needle in a haystack is your number one obstacle. We've solved that for you. Number two, misconceptions in the marketplace. This is one of the larger issues that people encounter. The number one experience that you will have when you call a listing agent, you find a property, your buyer's excited, you call a listing agent, you're like, hey, my buyer's really interested in this property, especially the assumable mortgage. The first thing you're going to hear the listing agent say is, it's not assumable, because there is so much misinformation. The owners don't know they're sitting on assumable mortgages. The listing agents have no clue. There's so much misinformation. So we have scripts, we have guidelines, we have videos and fact sheets in the Learning Center that you can share with these people. This is where you earn your big commission on these assumptions, is educating your fellow agents, right, in your locality, and taking them through the knowledge, the knowledge expansion that will suddenly make them go, wow, this is a really cool thing, right? The third issue, and I lead a free live training that's open to the public 5 days a week. It's actually in conflict with this training. We had to cancel it today to be here. But
thank you for that.
I'll post the link.
I'll post the link
on that right now. Just if anybody wants to attend one of Nora's training, again, five days a week. It's 11 a.m. Eastern, 8 a.m. Pacific. If you're in the middle of the country, figure it out, the time zone. But I'll post the link right now. Completely free of charge. They're usually small groups. Some are 5, 6, 7, 8, 10 agents at a time. And it's really good one-on-one time. If you have questions, you can attend anytime, 5 days a week.
And we have folks that come, 5, 10, I have somebody who's come 15 times, and he's still learning and he's still growing, and his team is on fire. He's in Bakersfield, California, and people are so excited. He's recruiting like crazy, right? He's really promoting not just assumptions to his personal network of potential buyers and sellers. He's also promoting it to all of the, yes, thanks, Ryan. That's right. Ryan is the guy who got us here. So grateful for you, Ryan. So people are using this opportunity, which I think was the reason Leo Pareja decided that this was the thing we needed to do, right? For all of EXP. So if you are on the fence, if you're somebody who loves Larry and loves agents helping agents, but you've been on the fence about joining EXP, this might be the thing that sends you over the edge. Because the fact that EXP is willing to commit the money and time and resources to giving agents this level of competitive edge, to me, if I had my license, I would be like, all right, EXP, I'm in, right? So that's number one. Number two, if you are already EXP, this is the, juiciest reason to call every agent that's been on the fence about joining your team and saying, we are about to, blow this market up, and the people on my team are going to have the best year that anyone's ever had in this market, so very exciting stuff. So the third obstacle that we found, when Mike was closing assumptions, Mike and his local realtor team in Northern Virginia, when they were closing assumptions in 2024, the cash gaps, like the distance between the purchase price and the remaining balance on the mortgage, was still pretty small. And because people hadn't paid off their mortgages from 2021 by a huge amount. And even though Northern Virginia prices skyrocket every year because there's such a terrible housing shortage, the Northern Virginia price increases had not had more than a couple of years to affect the price. So when Mike was first closing assumptions, he was saving his buyers $2,000 a month on average. Isn't that wacky? And this is for like $700,000 or $800,000 or $900,000 homes, $1.2 million homes, $2,000 a month. And I thought, when I first joined the team in 2024, I thought, oh my God, we've got 6 months, and then no one is going to want to talk to us if they can't save $1,500 a month. I was so wrong. I was dead wrong. I've got people calling me, offering me their firstborn child so they can save $150 a month, right? Because gas prices are skyrocketing. Groceries are 25% higher than they were last year, right? There's very few places in this economy where you can actually achieve more affordability rather than just, tear your hair out and cancel a vacation, right? And you as a realtor now have the magic wand. There's no hairdresser that can call people up and be like, hey, I've cut my prices by half, right? They have to pay for all their more expensive supplies. There's no grocery store that's like, hey, we figured out how to make groceries less expensive. None of that exists. You as a realtor are literally the only person in their entire community that can call these people up and say, I have a way to make your life more affordable. I have a magic wand for that. Let's talk. Let's have a webinar. I'm hosting this webinar with this lady named Nora Simpson. She's a little wacky, but she is the third most knowledgeable person on assumptions in the country. Mike and his beautiful wife, Bethany, would be number 1 and number 2. And I'm hosting this webinar for everyone in, Camarillo, California. I'm hosting this webinar for everyone that I know in Phoenix. I'm hosting this webinar for everyone that I know in Spring, Texas, right? And Nora's going to be there, and we're doing it Thursday night at 6 p.m. And we'll record it if you can't make it, but you should tell all your friends because everyone's going to want to know. Cecilia, go ahead. You had a question. Cecilia?
Yeah. Yes. I was under the assumption that you could do a assumable only if there's a divorce or a death.
Yep. You are one of the many people who is plagued by the many, many misconceptions that the banks have intentionally spread. If you Google or ChatGPT this, you are going to find a slew of myths and misconceptions. And that is because the banks actually pay bloggers to write wrong things about assumptions. Here's an assumption. Here's the rules about assumptions. Ready? Assumptions, VA and FHA assumptions are a federally guaranteed, legally regulated process by which any seller can transfer the entirety of their mortgage, the entirety of their financial, land, title, insurance, and hazard liability from buyer to seller without any divorce, without any...
From seller to buyer.
Oh, thank you, Mike. I didn't realize I said it backwards. From seller to buyer. The requirements are that the buyer must be credit worthy. In an FHA situation, FHA assumption, seller to buyer, the buyer must occupy the property for the first 12 months and be credit worthy. In a VA situation, the buyer can either bring their own VA entitlement to the situation, and they can do a VA to VA assumption where the seller leaves no entitlement behind, or a VA assumption can be executed from VA to non-VA if the VA owner is willing to leave behind the portion of their entitlement that is tied to the property. Most veterans and active duty military don't know about split entitlement. Very few agents know about split entitlement, but very few people even realize that you can leave behind that portion of your entitlement and still get a VA loan on your next purchase. Good job, Jeff Russell. So when someone uses their own VA entitlement to assume they have to live there for 12 months, when the vet is willing to leave behind the portion of their entitlement tied to the property, anyone can assume it, including an investor. And the investor can rent that baby out on day 1. So Cecilia, you may be confusing the VA and FHA rules with the regular mortgage rules. Conventional mortgages, 99.9% of conventional mortgages are not at all assumable, or there's only those very special situations. So it's the VA and FHA mortgages that are the assumable ones, and that's why it's only 7 to 15% of homes in the various areas that we cover that are assumable, because they have these VA and FHA mortgages. And at the end, I can talk about like the history of assumability and mortgages if you really want me to dork out on you, but let's cover our basics first. Does that answer your question, Cecilia?
Yes, thank you so much.
You got it so much.
Okay. And covering, finish obstacle 3 because Bernadette, that'll answer Bernadette's question as well.
Okay, great. So cash gap financing. So basically, as time marches on, people in homes with assumable mortgages are paying their mortgages every month. And generally, home prices are going up over time. We all know that the market feels very soft today, right? But in order to actually assume, first of all, the mortgage has to be in good standing. We don't get to do assumptions when someone's in a foreclosure or someone's in some kind of short sale. Once in a blue moon, you'll find someone who's behind on their mortgage but isn't in full foreclosure, and you might be able to negotiate something there. But the vast majority of assumables are going to be with folks that have taken good care of their property, have been paying their mortgage on time. Those people are going to want to realize the full equity in their property. So how do we make sure that that's doable for folks, especially when you have a $300,000 cash gap on a $700,000 home? Well, Mike and I went out and we worked with and interviewed dozens of lenders. I personally interviewed over 150 lenders. And we had a couple of lenders that we, parted company with because we were unhappy with the way that they handled things. But long story short, for the last year, after kissing all the frogs we kissed, we found our princes. And we found a lending team that offers the lowest rate second mortgages in the country available for assumptions, meaning they're available at closing. And B, these people are fantastic at customer service, and they pick up on the first ring, and they're licensed in 49 states, and they can just support all of our folks. And we actually took their second mortgage HELOCs that are the lowest rate ones in the country, and we built a mortgage calculator that's on every single property. Mike, why don't we open up?
Yeah, I want to do a demo. You want to just cover servicer resistance real quick, and then we'll turn this. I'm going to flip it over to do the demo real quick.
So we have these second mortgage, cash gap financing options available, so that people can still do assumptions, even if they're not getting to, if you buy a $700,000 home that has $400,000 left.
I'll give you the example when we show up on the screen so they can see at the same time.
Oh, okay.
Does that work?
I'm getting there. If you have a $300,000 cash gap on a $700,000 home, most people don't have $300,000 for a $700,000 purchase, but they'll have 70. So if they can put 10% down, and we'll show you this in a minute, if they can put 10% down and they can take out the second mortgage, the second mortgage is going to be higher than those amazing 2021 rates that are never coming back. But that's what we mean, and we'll go into more detail about how it works. When we talk about blended rate, we're talking about, the way that we help people still save some money, even if they can't save all the money, basically. The final thing is servicer resistance. So basically, banks hate assumptions. Banks pull a lot of dirty tricks to try to prevent assumptions. Mike and I have worked really, really hard, and we continue to work very hard. It is a constant push and pull. There are some very specific lenders, there are some very specific mortgage servicers that, for the folks not using us, they're like, oh, it was great, we closed it in 90 days. And I'm like, oh, that servicer, we close assumptions with them in 25 days. The rest of them generally are happy to push 4 months, 6 months, 12 months. They're trying to get you to give up. We have never had it go longer than 60 days. We get the FHA involved. We get the VA involved. We have had the VA Inspector General make very scary legal threats to these banks. And I wish that when he did, they would follow the law for everyone. They only do it for our people, because they're really trying to do everything they can get away with, and there just aren't enough regulators to force them into consistent compliance. But we know how to force them into consistent compliance, at least for the people that work with our transaction management team. So we've never had a turn down. We've never gone longer than 60 days. Okay, so that's the basics on the 4 obstacles. Mike, show them.
I'll give you a quick little demo. So 4 obstacles: how to find the home, misconceptions in the marketplace, cash gap financing, and servicer resistance. So those are the 4 obstacles you'll hear about assumptions, and we believe we've solved all of them. Cash gap financing helps close the gap. There is no such thing as 100% financing with an assumption. So it's not like it replaces a new VA loan where a buyer can, do 100% financing, 0 down. Not possible with an assumption. Generally speaking, a buyer still needs to have 10% down, and then the remainder can be covered through a second mortgage. So I'm going to run a search. Let's just go straight to the property search. Larry, you said you're in Houston?
I'm in Houston, Texas. Yes.
Okay. So just in the states we do cover, which if you go to AssumeList.com/area served, I'll just post this in the chat. And I do like the questions in there. I want to go through all those questions as well. These are the states we cover. This is just predicated on, like I said, where we have MLS access. And if you click on any one of these states, so let's go to Texas, for example, you can see the list of the counties in which we cover across that state. And it's a kind of spread across the map and then they're listed out. So I think we're in about 5 or 6 different MLSs in all the major MLSs in Texas. So let's go right to the search page. I'm just going to type in Houston. You can run a search based on city, county, zip code. You can type in the name of an HOA. I mean, it will give you. You can type a specific address, and it will pull up a specific address. So here we go. We're in Houston, Texas. There are 499 properties listed with a Houston address in Houston, Texas, and we can make this broader. We can shorten, customize this. So if we want to draw like a ring around Houston, now we're at 1,600 homes, right? Assumable mortgages. Every property on AssumeList has an interest rate below 5%, right? So just know that at all times we're really talking about homes that have an interest rate below 5% because that's the threshold for them to be on our platform. Let's go with, I'm just going to randomly pick one in Hockley, Texas. I'm not even sure exactly where this is, but it's in and around the Houston market. So right off the bat, we show photos, we show the status, we show it's assumable. You can see here that this property is an FHA loan and it has an interest rate right about 3%. Our software calculates this. So when it says estimated, just know the actual interest rate on a property and the actual loan balance on a property is not known to the public. The only 2 people that know that is the owner and the servicer they're making their mortgage payment to. Nobody else knows what that loan balance or interest rate is. So we have to reverse engineer every mortgage and figure this out. Now, loan balance is always accurate. It's within 1%. So $1,000, $2,000, give or take. And interest rate is usually accurate to within 0.25%. So and it's usually on the high end. So this loan is probably 2.75, could be 2.5, somewhere in that range, right? So you have a really good basis to know what you're looking at. And this one is an FHA loan. Also keep in mind, when you do an assumption or your client does an assumption, they are not buying a home with a 30-year mortgage. They are picking up where the seller left off. So in this case, if someone were to assume this property, that buyer is purchasing a home with a 23 years and 9 months remaining. So roughly the first 6 years of mortgage payments have already been paid. So not only does the buyer save a good amount of money, in this case, right about $350 a month on their mortgage, they're also saving each individual mortgage payment. A greater percentage of that payment goes towards principal because the first 6 years of interest has been paid, right? We all know, if you've seen an amortization table, right, the first couple of years of payments, it's like 99% interest. Well, 6 years in, this is closer to 50-50, 50% going to principal and 50% going to interest, somewhere in that range. All to say is, this gives you the details to know how to make sense of whether this property is viable or not. Now, in this particular case, the remarks section, this agent did not include any remarks to indicate that this home has an assumable mortgage. So if you were to run a search or your client were to run a search on Zillow, Redfin, Compass, Realtor.com, take your pick, they will not be able to find this property and identify it as an assumable home. Only about 10% of agents with an assumable mortgage will actually include those in the remarks section. And the only way to search for these properties without using AssumeList is running a search through keyword. And that keyword is only there 10% of the time. So buyers that say, I can just use Zillow, what they don't realize is they're missing out on 90% of all assumable homes in their market because you can't find those through keyword alone. Okay, so this property has a $165,000 cash gap, right? What is a cash gap? How is it defined? It's the difference between the sales price, the purchase price, and the loan balance. So we tell you the loan balance, AssumeList calculates that for you. And we obviously know what the home is listed for. And so it does the calculation for you. And you can run a search based on cash gap. You can identify filters based on interest rate, cash gap, right? In addition to, or even mortgage payment, which is a really powerful way to find homes with assumable mortgages. You just ask your client, what do you want your mortgage payment to be? Boom, pull up all those properties. Doesn't matter what the purchase price is. You can have a $2,500 a month mortgage payment here for a $439,000 home. You can find a home with a $2,500 mortgage payment. That's a $600,000 home. It just depends on how that loan is structured, what's left, what the interest rate is, right? So purchase price is less relevant for assumptions than they are with a new loan. What's really the most important number is the mortgage payment. Okay, so the question is, what if the buyer doesn't have this cash available for the cash gap? So $165,000 cash gap on a $439,000 home. They want to do the assumption, take advantage of this 3% interest rate. What are the options? Well, this is where, off to the right-hand side, we build this in for every single assumable mortgage. It doesn't matter if it's VA, FHA, USDA. The vast majority, of course, will be VA or FHA. And all you have to do is enter in the down payment that your buyer plans to use. Generally speaking, 10% is kind of the start point. So with a 10% down, right, it's 10% of the purchase price. So $439,000, 10% is $43,900. It will automatically calculate the funds financed by the second mortgage. So in this case, it takes the difference between that down payment and the totality of the cash gap. So the difference is about $120K. And then it provides you with that second mortgage payment, calculated based on our lender partner that offers the best second mortgage program. That is the exact mortgage payment that that buyer would get if they were to put 10% down. That second mortgage payment is a correct number. More importantly, what you now have is, since we now know the mortgage payment for the first loan, and we have the mortgage payment for the second mortgage, our software creates a blended rate. So that blended rate does a weighted average. And remember, they're still going to make two mortgage payments, but this gives you a way to assess whether or not it makes sense to use a second mortgage and whether they would still save money every month relative to taking out a new loan. And in this case, the blended interest rate, we write about 5%. So even with a second mortgage, they're going to get a commensurate interest rate equivalent to if they were able to get a 5% loan today, a new mortgage 5%. That's basically what this says. And we have a combined mortgage payment between that first loan that they're assuming and that second mortgage that they were taking out for the cash gap of about $33.47. What matters is, how does that compare to a new loan? So a new loan, it's automatically going to calculate roughly what the interest rates are in your current market. And so, if it's 6.375 is what your buyer can get, which is probably right about what somebody would get for a conventional loan today, I think somewhere in that range. This will now still calculate. It's always apples to apples. So it's a 10% down with an assumable mortgage. The same 10% down would be calculated if they were to take out a new loan. So it's always apples to apples. And with an assumable mortgage, inclusive of the second loan, this buyer would still save roughly $277 a month. So to me, this is a viable assumable mortgage. With a second loan, they're still saving, $280 a month. This is worthwhile. On a $430,000 home, a buyer should be very happy with that kind of savings. That was an FHA. Let's do a filter. I'm going to show you a VA, because with VA, things get a little bit more interesting. Anybody who's familiar with VA knows that there's an entitlement component, a VA entitlement component to all VA mortgages. This property is VA right here, and it has even a better interest rate, right about 2.5. So this could be, 2.5. It could be 2.375. It could be 2.25. This property has a cash gap of $122,000, right? So we have the loan balance relative to the sales price, has a mortgage payment of $2,204. And I'll just caveat that the mortgage payment is predicated on principal, interest, taxes, and insurance. Our software doesn't automatically factor in homeowners insurance, just because there's no way for us to estimate the variability, if it's, waterfront, if it's in a flood zone, what different localities charge for interest rates in different states. So you can go in here and you can edit it. Let's just say it's $150 a month. Boom. It'll now automatically calculate all the numbers inclusive of homeowners insurance. We get the tax records, or the property tax from the tax records, and the principal and interest, of course, is we calculate that from the mortgage. So now we have a true PITI assessment, right? Calculation. Separate from that is the HOA. We do show the HOA as well. Go ahead, Larry.
Real quick on the mortgage insurance, right? If it's an FHA assumable,
yep,
right? Because the loan balance, say, is $300,000, we're buying it for $6,000, but there's two loans. does that remove the mortgage insurance, or is it the combination of all of those?
Yeah, so generally speaking, on FHA properties, mortgage insurance remains for the life of the loan. There are certain circumstances, mostly gone by now, but if the loan had initially been taken out, don't quote me on this, I think it's like after 2013.
No. It's before 2011. If the FHA
2011,
mortgage
and they
was
had to have
issued
put
before 2011.
and they had to have put at least 10% down at the time the loan was taken out, then in that circumstance, if it's before 2011 and they put 10% down or more at the time the loan was taken out, then after they reach 20% equity, the mortgage insurance falls off. But I mean, having done this for years, very, very, very few FHA buyers ever put 10% down. The reason why they're taking out an FHA loan is because they want to take advantage of that 3.5% minimum down payment, right? So for 99% of FHA loans, that FHA and mortgage insurance will stay on for the life of the loan. We do display that in our calculation. So I just pulled up this FHA property, Larry, and we do include that in the PITI calculation. So the estimates you see for the mortgage payment and the savings is inclusive of mortgage insurance, the FHA mortgage insurance. Okay, so that's a very good point. Back to the VA component here. VA loans all have a VA entitlement component to them, right? Veterans have a certain amount of entitlement available based on the county in which they're purchasing. A veteran who has never used their entitlement before, or if they sold their home and they have their entitlement restored, there technically is no cap or limit for a single owner. So for one property. So for all intents and purposes, if a buyer can qualify for the loan, for the mortgage, then there's no cap. The limit on entitlement really applies to if they're splitting off the entitlement from a home they already own, and they're going to buy a second home or investment property or a second mortgage or something like that, or if they intend to leave their entitlement with a home they're selling, and then they intend to use their remaining VA entitlement for another purchase, that's when the cap matters, because there is a limit based on splitting it, how much is available. What we do for all VA properties in AssumeList, this is one of the most powerful features that we offer that I don't think we designed this from the ground up. This is not offered anywhere else. There's not a single tool platform in the country that I'm aware of that does this. We calculate what the seller's buying power is if they were to leave their entitlement with this property to allow either a non-veteran or an investor to purchase this home, and what that seller would have as remaining entitlement to use towards their next purchase. And why this matters is I can't tell you how many times I have spoken with a listing agent where I've got a buyer who's not a veteran. About half of my assumptions are with veterans. The other half of my assumptions are non-veterans, right? So non-veteran doesn't have their own entitlement to do a substitution. And so I would call the listing agent and say, hey, I've got a buyer interested in doing an assumption with your VA loan. Is your seller open to leaving their entitlement to allow my non-veteran to assume? And the listing agent really has no way to know whether the seller would or wouldn't. And usually what I would get is, well, I don't know. I haven't talked to him about that. That's what I would get most of the time. And then I would have to wait for them to have that conversation. They would come back and they say, well, they're not really interested. They need it for their next purchase. They need their entitlement for, they're buying a home after this. And I got to realize, well, maybe that's not true. Let me run some calculations and see if that statement is actually true. And it turns out it's not, more times than it is. So what we do is we actually run a calculation that tells the buyer's agent and the listing agent what the exact entitlement that the seller has left. And if they use the proceeds from their sale, they can actually purchase a home above their maximum entitlement. And then we have a basis with numbers, factual numbers. This is truthful information because we know the exact loan amount for every VA mortgage. This is recorded in the line records. So this is not an estimate, right? There's no EST at the beginning of this line. This is an actual documented loan amount that this borrower took when they purchased this home in Humble, Texas. So this loan amount is a fixed number that defines the amount of entitlement that is used in this property. It does not change over time. So when a homeowner pays their mortgage down, the amount of entitlement that's used does not go down. It is fixed from the day that loan is issued, and that amount of entitlement stays with that property through an assumption. So in this case, right, if I were representing a buyer and I want to put an offer on this home, chances are, right, this property, again, this listing agent did not include any comments that the home is assumable. So I would go into the conversation under the assumption that the listing agent either doesn't know that it's assumable or has no clue whether or not the seller would even be able to leave their entitlement because they don't have any way to calculate this. And most lenders can't calculate this either. Some really good lenders can, but many aren't really unable to do that.
Mike, we're running very low on time, so we need to cover two more things. Okay.
Got it.
Number one, we've got to give them the ability to sign up. I'm getting private messages going, so can I sign up for the free buyer account? Like, no.
I just wanted, I just try to educate folks because everyone wants to know how entitlement works.
So there's another piece of this, which is we have to show them the buyer sub accounts because it's the sexiest thing we offer.
Let's do it.
Okay. And then we're going to show how to, and we're going to do so fast. Okay. Like 30 seconds.
All right. Okay. 30 seconds. So everybody that signs up with an agent account has access to the sub account feature. What this does is it gives you the ability to invite your clients to AssumeList to use the platform. What's cool about it is when they run a search, they are running a search that's branded to you. So your name, your contact information, your phone number is plastered when they run searches. It shows your contact information, so they know they're getting that service from you. What's really cool is it also allows you to track their usage. So this is an agent account. You can see on a map the properties that they viewed. What's really cool is you can see each home and how many times they viewed that property to see if they really like the home, and you can kind of track their activity.
You can actually see everything they do. And this is a buyer sub account within the agent subscription. Okay. So you can see the listings they save. You can send them recommendations. They comment on properties. You can respond to their comments and vice versa. So it's very, very exciting.
And let me just show, when you share a property with a client, let me just give you an example of what that looks like. You can share it with them. If they're a client sub account, you can recommend it to them, or you can just create a shared link and just send it to it in an email. And when they open it up, right, this is what it looks like from their standpoint. So I'm logged into my wife's account. Our team is called Fidel's Property Group. So this would be branded to you as it's branded to my wife, right? All of her contact information is here. So anytime you share a property with a client, they see this branded experience that you now presented to them. So really, really powerful. You can also set up automations where listing alerts. So anytime a property matches their specific search criteria, they will receive an automated alert sent right to their inbox. And then, so it's a push system automatically sending them new assumable properties, again, branded to you.
All right. So now we're going to go to AssumeList.com/exp, right, Mike?
Yep. I got to do that as an incognito window. Nora, are you answering questions in the chat?
I've written in answers to pretty much every question while you were talking. Does anybody feel, oh, that's the wrong place that I put it. Does anybody feel like I didn't actually answer your question? Did anybody feel like I wasn't clear or that Mike didn't cover the answer to your question? So AssumeList.com/exp is where you all need to go if you want access to your free EXP account paid for by Mr. Leo Pereira himself.
Yep, you can watch like a 30-second video here. He's super excited about it. So what you do is you go to this website. You can hit this button to attend training, and that will send you right to the link to register for Nora's training Monday through Friday. You can just select what day you want to come, completely free of charge. In this case, since we're going to provide you, Nora, go ahead and post the registration code.
Absolutely.
So you're going to click, I have a registration code. Now, unfortunately, this is only available to EXP agents. If you're not an EXP agent, then you can just go to the homepage, click on the pricing, and you can just subscribe. So this is exclusively for EXP agents. You're going to click on that, I have a code. This screen is going to pop up, and then you're going to enter the registration code that Nora just posted in the chat. This code is only good for, I think it's 48 hours.
I mean, it might even expire tonight. So guys, please don't wait on this.
Don't wait on this. Enter it 48 hours. Otherwise, you have to come back to another training. Enter that code, hit submit. Then you're going to get to your registration page. Just enter it. Just fill out the form, right? Your primary email address is the email address that you want to use when you log in, that your clients will see when you use this platform. You're going to enter your phone number, create a password. How did you hear about us? License number and state. That's just so that we know when you share properties with clients and you create a sub account It's going to give you the ability to share properties in states that you're licensed in. You can always add additional states if you're licensed in multiple states. The most important part here is down at the bottom where it says your official EXP email address. And this is where you're going to enter in your exprealty.com or exprealty.net. All you have to do is enter that in. When you hit the I agree and I'm not a robot, register now, the system will generate a verification link that will be sent to your official EXP email address. This is how we know that you're actually an EXP agent. Once you click that verify button, you'll get a green check. Boom, your account's active. You are up and running. You do not have to add any credit card information. Your account is active, and then you just use your primary email address to log in going forward.
Absolutely. And Mike, let me just say a couple of things. So number one, this code will expire. It will expire very quickly, like either tonight or tomorrow. So here's what I need you to understand. Some of you right now are going to email support@AssumeList.com, which is what we ask you to do if you have a problem. And you're going to say, I attended the Larry White training, but my code doesn't work.
And you're going to send that on Tuesday of next week.
Weren't listening. Because we say it over and over that the code will expire, right? That's how I know people come to my daily training and go multitask and turn me on mute. And then they email support@AssumeList.com and say, the code didn't work. I couldn't get it to work. Well, guess what? You weren't listening. And I remember having meetings with all of the fancy schmancy, EXP super leaders. And I said, assumptions are so complex. We have to make it so that when people sign up, they are signing up in the context of training.
The reason why we have to have this set up this way, and this is really requested by EXP, and that is because there are only a limited number of seats available. Right. This is not something where every single agent can sign up. 60,000 agents nationwide. There actually is, there's not enough seats for the number of agents that want to use it. So EXP requested that we, one, require training, and two, that people have to want to use it and are using it. So once you sign up, really just use it on a regular basis, because they may start reconstituting unused seats if you don't log in for 2 months at a time. They're going to see that, and they're going to want to reuse those for other agents that are actually going to be active.
And you can always come back to another training, get another code. Like, we're not going to punish you. We just want you to get the training, right? Yep. Now, the good news is there are still several hundred seats left. So if you want to use these seats to recruit, if you want to use these seats to get your team excited and have a doubling of revenue and a doubling of, I forget what the EXP terminology is, when you get money from people below you in your team.
Revenue share.
Revenue share. If you want to double your revenue share this year, right? Get every single one of your EXP people who work with you to sign up for AssumeList and start promoting. We have so many ways that we support you in growing your business around assumptions. And just because, just getting people excited about assumptions will double your business. Not every single human being on planet Earth will close on an assumption, just for many reasons having to do with preference and, finding what they want. But this gets buyers off the sidelines, into the math, into the possibilities. And we see it double people's businesses over and over. So we want to see you have these huge growth options, these huge growth growth leaps in your business. Yeah, go ahead, Larry.
And I was just going to say, guys, Leo has not even officially announced this yet. He is not officially announcing this for another 2 weeks.
That's right.
August 12th. We have a nationwide, it's a StreamYard event with Leo to announce this. And so now's your chance to get in. I'm guessing there will be, we will be out of seats by that August 12th event.
Yes. So this is where I wanted to bring this. Ryan was like, hey man, you got to look at this. Lawrence King was like, hey man, you got to look at this. I talked with Nora. I was like, yes, let's get this out to everybody. So this is a huge opportunity to get in, because yes, after August 12th, I would assume that the seats will be taken up just like that. So this is where we stay ahead of the curve. Now you merge this with what we're doing with Hero Star. Guys, that's a game changer. And I don't think Johnny Perez is, but Mike, I want to make sure that I connect you and the Hero Star network, because there's so many things that you guys are doing simultaneously, and that I think could just compound to the next level.
Awesome, Larry. Happy to do it. And Eric has a question, and I want to close out with one really important statement. But Eric, go ahead, sir, please.
Yeah, the question I wanted to ask, because I sent a newsletter out to my group. I have about 250 agents in it, and right today we only have about 20 on the call for those other agents, if they wanted to do this and that code's going to expire, how do I get them registered for a training? Is there a link or how do I get them to
There
that
is
training
a link.
before August
There is
12th?
a link. You just have to come to one of my daily trainings. I give out a new code every day in that
Okay.
daily training. So you
There's-
got to, they've got to show up. They've got to be
There's the
willing,
link.
There's the
right?
link. Okay, great. Thank you.
So that is
got
the
it.
link. And yeah, call them, Eric. Call all 200 of them and be like,
Oh, I
get
will.
yourself registered right now.
I
You
will.
know, because this will it'll double their business, it'll double your business, it'll double your revenue share. Like,
So so let me just close out because we're out of time, right, Larry? Yeah, hopefully this was valuable to the audience here. But I use assumptions not because I expect everybody that I talk to about assumptions to buy a home with an assumable mortgage. In fact, only about half of the clients that I generate or leads that I generate would even consider it. But I talk about it because I'm able to convert more leads into clients because I can offer this and I can give them an opportunity to save money that other agents can't, right? So I want everybody to walk away from this knowing that this is not about that you have to close a home with an assumed mortgage. It's the idea that you can offer something that other agents can't, and you're giving buyers something that every single one is interested in. They want to find a way to create affordability and lower the cost of housing, right? So just keep that in mind. The second thing is I structure my buyer representation agreements where I charge a higher commission when I help a buyer with an assumption. So I have a different tier system, and this is legal in all 50 states. So I have a fee that we charge for assumption for traditional purchases, and I personally and my team we add an additional 0.5% when we do an assumption assumable transaction because it is more time consuming. There's more knowledge, and I'm getting paid for a skill that I have that I've learned about, right? So this is a way you can actually generate more money for selling the same homes or selling more homes, right? So this is a really powerful way, and I've never had a buyer question or complain about the additional commission because they are so excited to get that 2.75% interest rate. The additional commission, if you can't get it from the seller, sometimes the buyer will cover the delta there. They're going to make up for it in like 2-3 months of interest savings. So they're happy to pay it.
And Mike, to be fair, we do run across 1 or 2 folks once in a while who are like, hey, can I do a flat commission of this? Can I do a blah, 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 blah? And those are the people who never wanted to pay a commission to begin with. Like those are the people who are a giant waste of your time because they don't believe in paying for value, right? We actually had a guy that signed our commission agreement, worked with us for a year, bought nothing, and then came back and said, hey, I've got a property, but I want to pay you 0 commission. I want you to take 0. And we were like, yeah, no. And then we had to stop working with the guy because we were like, this person doesn't understand value. None of that had to do with assumptions, right?
What we didn't cover today is the savings, closing savings, no appraisal cost, lower closing cost, right? There's all kinds of savings. We didn't even get to talk about the meat and potatoes of how to have the conversation with your client about how buying an assumption home with a assumable mortgage, not only to get a lower mortgage payment, but their closing costs. They'll save thousands of dollars at closing out of pocket because assumptions have lower closing costs.
So I hope that everyone here is not only registering for their free AssumeList account, but registering for at least one training.
It's like I take you on the real tour, not the government tour.
Okay, Frida.
Sat in the cars, we took pictures.
I think Frida doesn't realize she keeps unmuting. God bless. So I think so what I want to say. Oh, Larry, can you do something magical? Good job. Okay. So what I want to say is please don't just register for your AssumeList account. Please register for at least one training next week with me. Even if you've already registered, even if you think you don't need a code, you don't need a code, but you are going to have more questions. The
United States.
You are going to need more support on this, and you're going to want to set an example for the people on your team that you're there just like they are, because even the people who are the most knowledgeable, I have an agent that's a subscriber that has closed over 200 assumptions. I would say he knows what he's doing. He comes more often than anyone else to our trainings. So we're all still learning. I'm still learning. Every time I hear Mike talk about it, I learn something new, and I'm teaching everybody. I'm the 3rd most knowledgeable person in the US, and I'm, teaching everybody, and I'm still learning. Mike's still learning. We're figuring out, we're coming, this bank has decided that they think they can break this law. Okay, so how do we make them follow this law? And then we get them to follow it in 3 days. But this is a very active experience. So come to these trainings. You will not regret being someone who knows more by leaps and bounds. Right now, like when we were at 11:36 Eastern time, you knew more than 99% of all agents in your marketplace, right? Now at 12:06, like 10 miles more than 99% of agents. You come to 1 or 2 trainings next week, you're going to know 100 miles more. Okay, people will be beating your door down trying to work with you.
All right. Thanks everybody for your time. Larry, over to you. Let us know. Yeah. I mean, we're happy to stay on a few extra minutes if there's any follow-up questions. I mean, over to you, Larry, at your
I know
show.
I do have a hard stop.
Okay.
I'm 6 minutes late here, but
okay.
you want to cut things off. Guys, I hope that you guys got some value for this. Like I said, there's very limited spots, right? Not a lot of people know. I don't see there's a lot of risk, but use it. Like, you can have all the tools and resources in the world. If you don't actually go to the training and learn how to implement and what to say and how to explain it, this is worthless at the end of the day, because you're never going to be able to use it. You're never going to be able to implement it. But this could be the thing. Like I typed in there to Natasha, we have hundreds and hundreds of funnel pilot leads. That's a way to re-engage these leads and be like, oh my gosh, I have a list of homes that you could have access to that are between a 2.5% and a 5% interest rate. Do those interest you? That gives you a competitive advantage over all of your competitors that don't know about this at this point in time. So that's where I saw the value. I hope you guys saw the value. Mike, Nora, thank you guys so much for jumping on here, and we'll talk to you guys soon. Have a great day, guys.